Okay, so let's break this down. We're going to look at how one single military operation in the Middle East lit a financial fire that spread halfway across the world, literally vaporizing $250 billion in just one day. This is the anatomy of a 72-hour meltdown. So let's just start with the raw number, the headline. $270 billion. On March 3rd, 2026, that's how much value was just gone from the South Korean stock market. And we're not talking about a bad month or even a bad week. This happened in one single day.
And what's just crazy about this is that the market was absolutely on fire. It was hitting record highs, just days before this, all thanks to a huge AI rally. So how does a market at its absolute peak just slam into a brick wall? That's the question we're going to unpack.
All right, so to really get this, we got to go back to the source. And the story doesn't start on a trading floor with a bunch of blinking screens. Nope. It begins in a narrow, strategic strip of water that all of a sudden just slams shut.
Okay, so check out how fast this all went down. It was like a cascade of dominoes, one falling right after the other. It all kicks off on February 28th. A U.S.-Israeli military strike hits Iran, and the supreme leader is killed. By that same night, Iran hits back by declaring the Strait of Hormuz closed. Just 2 days later, boom, a drone strike takes out a massive natural gas facility in Qatar. And then, on March 3rd, the South Korean market opens up after a holiday, and it's a complete meltdown. You can literally draw a straight line from that first military action to the market panic, all in just 72 hours. Incredible.
So you might be asking, okay, what is the big deal about this one little strait? Well, think of it less like a river and more like the main artery for the entire global economy. It is a serious choke point. But through that tiny passage, you've got a fifth of all the oil the world burns and a fifth of its traded natural gas. So yeah, when that artery gets blocked, the whole system starts to have a heart attack. Now, look, Iran had rattled this saber before, right? They threatened to close the strait. But this was different. This wasn't a threat. With their leader gone, they were in survival mode. The strait stopped being a bargaining chip they could play in a negotiation. It became a weapon of last resort. And that, right there, is what made this whole situation so much more dangerous.
So you can guess what happened next, right? The second that strait closed, bam, we get the next domino, a massive worldwide energy shock.
And this chart, wow, it just lays out the panic perfectly. I mean, look, oil prices jumped 15%. That's a big deal on its own. But check out natural gas. Europe, up 52%. Asia, an absolutely insane 137% jump. So why the huge difference? Well, it's because LNG, liquefied natural gas, is complicated. You can't just call up another supplier. You need this whole expensive, specialized system, cooling plants, special ships, reheating terminals. When a fifth of that supply just disappears, there's no plan B. The system just breaks.
Yeah, and one analyst, Simone Tagliapietra, really nailed the feeling at the time. He said the threat wasn't some far-off what if. Nope, it was, and I quote, here and now. This wasn't theoretical. This was a real-time crisis, and you could feel the shockwaves ripple all the way from Asia to Europe.
And this is where the energy panic smashes head-on into the financial world. What you're looking at is basically the carnage from South Korea's Black Tuesday. The whole market, the Kospi index, drops over 7%. But just look at the big boys, the absolute pillars of their economy. Samsung, down almost 10%. SK Hynix and Hyundai, both down over 11%. It's just a wall of red, a total bloodbath.
Okay, but wait a minute. You might be thinking, this was a global crisis. So why did South Korea get hit so hard? Why were they ground zero for the financial meltdown? Well, the answer is, they were caught in a perfect storm. They had a set of vulnerabilities that pretty much no one else did. You see, South Korea is a manufacturing giant, right? But here's the catch. They have to import almost all of their energy. We're talking 92%. And here it is. Here's the Achilles heel, the number that explains everything. A massive 70% of their oil and over 20% of their natural gas has to come through that one single choke point, the one that just got slammed shut. They weren't just exposed, they were catastrophically exposed. But here is where things get really interesting. Inside all this chaos, you get this weird paradox. On one hand, you have Samsung, a global tech titan, and they get absolutely hammered. Investors are freaking out. They're thinking, how are they going to power those giant factories? And who's going to buy their AI chips in a global recession? But on the exact same day, this local defense contractor, a company called LIG Next One, has the best day in its history. And the reason? Their missile defense system just proved it works in actual combat. Just take a second to think about what that drop for Samsung really means. This isn't just some startup. This is Samsung. They're the bellwether for the entire Korean economy. A hit like this isn't just a bad day at the office. No, it's a massive red flag. It's a signal of pure panic about the future of the whole global tech supply chain, which, you guessed it, needs a ton of energy to run.
And then you see this. While Samsung is cratering, LIG Next One skyrockets nearly 30%. It's a classic flight to safety, textbook stuff really. All that money just fled from the big exposed tech companies and poured into the one place that looked safe, a defense company whose product was suddenly the star of the show. It's a really powerful reminder, you know? In a crisis, money doesn't just vanish. It just finds a new home, and fast.
And of course, the pain didn't stop with stocks. Oh no, it slammed right into the currency. The Korean won just collapsed, blowing past the 1,500 to the dollar mark. And you have to go all the way back to the 2009 financial crisis to see numbers like that.
And a weak currency like that, it just creates this awful vicious cycle. See, global energy is traded in US dollars. So if your own currency is tanking, the price of that already expensive oil and gas gets even more expensive. It's just a brutal 1-2 punch to the entire economy.
Okay, so we've taken apart the how and the why of the crash. But imagine being right there, in the middle of it all. The only question on anyone's mind was, what on earth happens now? And really, it all boiled down to 3 possible futures. You had the best case scenario, which, let's be honest, everyone thought was a long shot, a quick ceasefire, a diplomatic solution. Then you had the base case, the one everyone thought was most likely, a long drawn-out standoff for a few months. And then there was the worst case, a full-blown war. The Strait becoming a military zone, oil shooting past $130 a barrel, and maybe even power shortages forcing factories to shut down. Just a terrifying thought.
So, when the dust settles, what are the big takeaways from all this? Well, first, it's a stark reminder that one geopolitical event can set off a chain reaction across the entire globe. Second, these energy choke points like Hormuz are a massive weak spot in our modern economy. Third, and this is a timeless lesson, when things get scary, capital runs from risk and sprints toward safety. And finally, and this one is really important for today, all this amazing AI tech we're building, it's incredibly power hungry. The AI boom has a dirty little secret. It's totally vulnerable to old school energy shocks. And that really leaves us with one last big question to chew on. As global tensions keep rising, and as our world gets more and more dependent on technology that needs huge amounts of power, are our economies really built on a solid foundation? Or is this whole amazing, complex system we've built actually just balanced on a nice edge?